Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for this morning, or at least as long as I can stand sitting in my office chair. My back has just been giving me fits the last couple of days, and it's terribly uncomfortable, to say the least. Yes, I've been to see the doctors and stuff, and I've got to see the doctor again this afternoon. And hopefully they'll be able to give me something for the pain. All right. For those of you new to the DTS system, now that I played the sympathy card, it's the diversified system, DTS. It's diversified because it's looking at the market from three different points of view. You know how your signal will work well one day and it doesn't work well the next? Well, your signal hasn't changed, so what's changed? Well, the underlying market conditions have changed, and you need to change your signal to accommodate that. So, like my grandfather used to say, if the only tool you happen to have is a hammer, then every problem looks like a nail. So here you have three different hammers for three different nails. Top left is the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. It's the Raptor. The Raptor is a combination. Tony says, do you want me to walk on my back? I don't know, Tony. Were you a geisha girl in another life? It might help. All the signals tend to develop the same way, namely when the signal parameters are beginning to be met, we get a warning dot along with an audio alert, and then when all the signal parameters are met, we get a triangle and a hash mark. That tells us it's decision time. Now you're going to notice a lot of these arrows and signals and stuff. We don't always take those, and the reason is we're waiting for our high probability signals. So for instance, a signal that produces off of a yellow bar is not a high probability signal, so I tend to ignore those. At least that's true for the Hawk. Signals that occur out of sync. So for instance, if we're producing a buy signal and we have a red trend line and a red filter, that's out of sync. I'm not looking to buy that signal. Rather, I'm waiting for the signal to come back into sync. That's really what we're doing for the most part. We're just waiting for things to come into sync. Here's a nice example. Trend line goes, this is the Falcon Swing Trader, trend line goes from red to green, and the market makes this push up, changes the trend line color, and it comes back with a red bar, and now we come back with a green bar or a set of green bars and a signal, and at this point everything is green. So we have green markers, we have green trend line, we have green filter. That is a buy signal. And yes, it gave us a little bit of heat, but it didn't take too long before it continued higher to its target. So that's what we look for the most part. The market I'm following here is the NASDAQ. I would be happy to look at any market which is of interest to you. This is the Eagle Trend Trader. The Eagle has this band running through it. No, it's not an Ichimoku cloud. Yes, I know it looks like one, but no, it's not. And when this band is bullish, we're going to be looking primarily for buy signals. And when the band turns bearish, we're going to be looking for sell signals. Pretty much as simple as that. Whenever the band encounters the hard edge, we always anticipate some sort of reaction. So that's where we're at right now. So we anticipate that the NASDAQ is going to give us a little bit of a reaction here, and hopefully we'll see a little bit of an uptick. Whether prices fail and turn over and the market heads lower, well, that remains to be seen. That's a very distinct possibility at this stage. And then last but not least, we have the Raptor. The Raptor is the latest addition to the DTS family. The Raptor incorporates elements of the other three trading tools all into one platform. The reason that came about is we had owners who were trading off of laptops or had limited real estate, and they said, can you just give me something that I can watch on one screen? Well, that's how the Raptor originated. So we've got elements of the Hawk, the Falcon, and the Eagle all built into here. You'll notice the band from the Eagle. The Raptor actually has a double band. And as such, we're going to look for band-related signals. So now that the market is in this band, we're going to look for it to possibly come out of here, print a signal. It looks like they're going to try to short the market first. We've got a warning dot. This is technically our cloud crossover signal. If the market produces a signal to sell here, we would expect at least a short-term move lower. And of course, if it bounces and comes out of all this mess with a buy signal, then it's a probable buy also. So the market kind of whittling itself into a little bit of a corner. I'm also watching crude oil and gold. But like I said, I'd be happy to pull up any market which is of interest to you. We've got we've got a first micro-macro cross signal here in the Hawk. This tends to be our high probability signal. It actually triggered right here. I got a second chance at it over here. Ideally, I should cover the trade at least up to there. Oops, what's going on? Slipped past me, why don't you? This is now working itself into a 4-arrow consolidation. The tool I'm using here to enter the trades, this is called the Trade Manager. The Trade Manager is really, I say all the time, it's possibly the best tool you can own as a retail trader, and I don't say that lightly. I'm just going to readjust the trade now to take advantage of that macro pullback. The Trade Manager has 16 different stop strategies for you to choose from. Those appear as these blue dots. They're all customizable. So if you want to make it a little more conservative, you could do that. And like I say, there's 16 stop strategies here. It also has this risk component built in. So right now I have my risk set at 2%, and by the way, we're getting a green bar sell signal, so I'm just going to adjust the trade a little bit here. The risk component never allows me to risk more than 2% of my trading capital, regardless of where I placed my stop. So even though I've left my stop, well above these swing highs, I could even place it above the swing high, and the risk amount will still be the same. Watch this. So I'm going to enter same place. I'm going to stop above the swing high. Oh, okay, rounding error, but you get the idea. It will max my risk exposure to only 2% of my capital. In this case, I lost one of the contracts available to me. But what that does is it never allows you to risk more than you can afford to lose. And that's very important. So when you have the order the way you like it, you just activate it, and there it sits. So we've got warning dots on a green bar. We're about to produce a buy signal should this market continue lower. No, still slipping further away. Still technically a green bar sell, even though it's not looking like it's going to, now the warning dot has disappeared. So the sellers have lost their edge on the market. Probably going to come back here now with a first micro macro cross signal higher. Now, what are all these signals I'm talking about, you say? They're really not that difficult to identify. What we do is we go over the signals every day in the trading room. And we also have what we call a cheat sheet. So here's your cheat sheet for the hawk. So you can see these are the 5 primary signals that we focus on finding. The first micro macro cross, which is essentially the first signal where everything is in sync. The macro pullback, everything stays in sync except the micro line. The 4-arrow consolidation simply means that you get 4 signals printing without any follow through. Well, the market will tend to follow through off that 4th signal. So if you happen to find yourself getting in early, don't panic. When you see that 3rd signal, you know that that 4th signal is not far off, and the market should rally from there. Another macro pullback signal, also in this case a post-consolidation signal. And then toward the end of the trend, we get these red bar buys, or in a downtrend, it would be a green bar sell. And those tend to be kind of last-ditch effort on the parts of the buyers to overwhelm the market. And as such, we can buy them or short them. And we have similar cheat sheets. Here's a cheat sheet for the Falcon. You can see there's really just 3 basic signals that we're concentrating on. Your trend change signal, which again is your first in-sync signal after the trend line changes color. The late filter entry signal, a very high probability signal. Filter changes color, trend line does not. You produce a signal, away you go. And then your basic trend line touch signal. So these tend to be the most common, and these are your higher probability signals. Okay, so this is interesting. Now we've got a red bar buy signal. We've got a market that's going totally sideways. What do we think? Is it going to be to our advantage to try to buy this up, or should we take the safer route and just short it? Short the failure of it? All right, let's try that. You can always use it just as an early warning as well. And by that I mean ignore the signal, knowing that if the market breaks down at this point, it's probably going to develop into a first micro macro cross lower. You could always dial down the risk amount as well, say from 2% to 1%, or simply just throw a onesie on it, go from risk mode to manual mode, and that will lock in your quantity. Your quantity you can preset up here. All right, well, we'll leave that alone for the moment. Let's see what else is going on here. Not much, really. Pretty tight trading range this morning. So we opened, came down, kind of set a low, came up, retested the high. I guess technically you could consider this a soft edge sell. It's It's not a real pretty one, though. Alright, the Raptor's stuck sideways. Actually, everybody is pretty much stuck sideways. Gold. Here's gold on the eagle. Just kind of twisting back and forth in the wind. Are we expecting some sort of announcement today? Okay, so we can cancel this signal because obviously the market is not going to follow through on that. Not yet anyway. If we don't get a decent signal, oh, is Yellen speaking today? Is Yellen yelling? Tony says the market's waiting on Yellen. Oh, there we go. Yeah, Russell says lots of news coming out today. That explains the lack of momentum. Well, we'll take a trade here soon. If we don't get a decent signal, we'll take a less than decent signal, just so I can show you how the trade manager rolls the stops. We might even catch a little bit of a lucky break. You might have noticed a little bit of a difference between the trade manager, which I have on these tools, and the Trailblazer, which is on the Raptor here. The Trailblazer is a one-click system. It incorporates the trade manager component where you have all the stops and they're all customizable. You've got 16 different stops here to choose from. But you may have noticed you don't have the risk component. You preset your orders up here. So right now I've got one order with a 20 tick target, another order with an open target. So if you're using the Trailblazer, you're going to need to know more or less what your position size should be so you don't end up trading too many positions. The nice thing about the Trailblazer is it works really well in a fast market. Some of the DTS owners were trading some very fast markets. Okay, I'm going to take this buy signal. It's not a perfect one, but let me show you how this works. They were trading some fast markets and they were saying, you know, Eric, by the time I click my entry and my stop loss and then I have to go back and click submit, the market's already engaged my order. Can you give me a one-click system? Well, this is where the Raptor came from. So with one click, you have your profit targets. I happen to have the break-even trigger turned on. We have our entry, and we also have our stop losses. All right, so that's how that works. That's why the Trailblazer is a little bit different than what you see in the other tools. Yeah, thanks, Clay. Clay says crude inventory out in about half hour, 40 minutes time. That will hopefully spark the crude oil market a little bit. And like I say, this wasn't a decent signal, but maybe we can just get an uptick here, and you can see how the trade manager actually starts rolling your stops for you. I think it's a fantastic tool, because what this enables you to do is you don't have to babysit this market now. You can put this on the shelf, and you can go look for other opportunities, either within your other tools or across markets. You know, this allows you to concentrate now what's going on in crude oil or gold or the E-mini or whatever. The Aussie New Zealand dollar cross. Something terribly exotic. Come on, just give me one bar so you can see how this rolls. Oh, stinkers. Going the wrong way. Again, not a high probability signal. With the Raptor, we tend to look for trend change signals. So here's a trend change. When the trend changes and the clouds cross over, we expect the market to retreat into the cloud and then come out of the cloud and produce a signal. This isn't as strong a cloud crossover. It's not textbook, but it did have some decent follow through to it. After which time we're looking at the hard edge bounce. It's normally what we call a double pullback into the hard edge. So here's pullback 1, there's pullback 2, then the market comes out, produces a signal, and then we have the soft edge sell. So when the market fails to recover the highs, in this case recover the highs, it produces a counter trend signal. We anticipate a move in the opposite direction. I suppose in a way this is almost like a hard edge bounce. Oh, I should have, oh yeah, back here. Back there was a much better hard edge bounce. Now we're just moving too much sideways. And when the market moves sideways, we're going to get one of these. We're going to get one of these sell signals. I was actually favoring a short signal. Yeah, there they go now. So they produced a sell signal here. This would be what I would consider a soft edge sell. Let's just see if we get, well, we got a rule of 3 type signal here on the Eagle, where we've broken down, we've come back, retested the highs, now we're coming back with the sell signal. We don't have that third signal yet, so a couple of things you could do. You could enter below this low right here. That's safe. Or you could let the signal engage and then retreat so that we can see the current limit of the buyers and sellers. And then what you could do is you could use that level as a second push into the signal. Okay, so the signal is engaged. Come on, let's see if it retreats. By retreat, I mean a serious uptick. Like this one. You know, this one engaged and then made a fairly substantial reversal. Okay, that was not bad. See how we're kind of trading above the half? Can I cover above the high? Ooh, I can. Yeah, that's too steep. Okay, so we've obviously breached some sort of trend line support. We can anticipate that the buyers are going to try to support this market one more time. If the sellers get on board here and start selling, then we're going to have our rule of three signal here in the Eagle, which is a pretty strong sell signal. Okay, let's see if we can find you a better Raptor signal now. That one was just kind of taken on the whim. We're going to get working on a first micro-macro cross. The macro line is not in sync yet, so don't get too excited about shorting that one. See what I mean about having three different tools? If you had just one tool, whether it was whatever you're using, a stochastic crossover or a moving average type system, it may or may not be producing a signal for you right now. We've got our Eagle signal, so we've kind of got our bases covered. Waiting on the Falcon, the Hawk, and the Raptor. Although today seems like one of those days where you place your trade and you leave your stop way back and just let it drift. Oh yes, I see. I'm looking here at the meetings. Yeah, probably not a whole lot's going to happen for the first hour and a half of trading. FOMC economic projections, FOMC statements, federal funds rate, FOMC press conference. Maybe not the best day for a demo. So I guess I'll be showing you some less desirable setups just so that you can see how the tools work. Because a sideways session does seem to be in the books today. And as I said, that's pretty much across the board right now. Yeah, see here the Hawk all of a sudden going back into yellow bars. On your Hawk scalper, if you get a lot of yellow bars, and look at how they're printing. They're all printing sideways, more or less at the same latitude. You don't need to be a master trader to figure out that this is a sideways market, a choppy market. So people always ask, Eric, how do I trade chop? How do I trade chop? You don't. You don't trade chop. Well, you don't if you're really, really, really desperate for something to trade. If you've identified that the market is within a sideways range, you sell the top end of the range, you buy the bottom end of the range. And this is the type of market you definitely want to scalp out with profit. Don't get too carried away here thinking you're going to find a home run trade. It may happen, but there's no way to see it coming really. Folks, you need to excuse me for a little bit. I need to just deal with my back issue here for just a moment. I'll be right back. If you have any questions, I'd be happy to answer them when I return. I am going to leave this Eagle trade in play. We'll see if the market turns over here and produces another sell signal. That will be our rule of three, and we may well see the NQ slip a little bit lower. But of course, if we start trading a little bit higher here, then we're just going to end up scrubbing that trade. All right, I will be right back. I'm back. What did I miss? Not a whole lot. Yeah, sorry, Dan. I just had to step out there for a moment. Yeah, thanks. Thanks, Steve. Steve's giving me the history of his back problems and what was working for him. I've got a bulging disc that is just driving me crazy. Um, I've gone for a couple of scans and whatnot, and I'm due for a CT scan this afternoon, so hopefully the doctors will get a handle on it. Russell says gold's probably working toward a setup. Let's go take a look here at gold. And I think you could be right, Russell. Here's gold now on the Eagle, coming out of the hard edge. Just a traditional all-in sync signal. Let's see if we got any. That's not bad. I might use this current bar as the signal bar because right now we're against the ATR. That's the squiggly red and blue line that you see here. And what that will do, it will just put the ATR into sync with our trade. So I would enter above the high of that bar. And where can I cover to? I'll probably cover at least to there. So that's a very possible gold trade. Good IRS. And then here on gold now on the Hawk, we were producing a macro pullback signal, which now is moving into another macro pullback signal, and maybe even a 4-arrow consolidation. You see we have 1, 2, 3, and we're about to print signal number 4. The Hawk giving us a little bit more structure. Oh, drifting into yellow bars. Now, I did just say that I don't take signals off of yellow bars in the Hawk. The exception is the 4-arrow consolidation. The 4-arrow consolidation tends to be a fairly strong signal, and as such I would take it even off of yellow bars. All right, we'll put that on the shelf there for the moment, and let's go see what's going on with the NASDAQ, which is also just trading punches here at the moment. Yeah. Thanks everyone. I'm getting quite a bit of sympathy through the chats. Oh, I'll live. It's just I got a little bit of a flare up. It doesn't usually bother me. You know, like most people, I've thought I was going to live forever. I did a bunch of stupid things when I was younger. Now the stupid things I do tend to be more cerebral. Don't involve punishing my body as much as they used to. And though it just gets hard to sit for a while, as anybody who has had back pain knows, you find yourself squirming in your seat, you can't get comfortable. All right, here we go. We're starting to break down again. Looks like the sellers may try to give this a poke. At this stage of the game, it's a 50-50 type proposition. What I'm looking at is I'm looking at the red bar buy signal that might build here on the hawk. And if it does, I'll look to short the signal. It's not pretty though. When you have a sideways range like this, I've mentioned this before. Actually, I'll do it here on the hawk. Why not? When you have a sideways range, the best course of action is just let the market get outside of that range, retest, and then look for your buying opportunity. Or break to the downside, retest, look for your sell opportunity. That is the best way to trade a market that is in range. Forget about this early breakout stuff. Because, if you haven't noticed already, most breakouts fail. So the market will make a really, really strong move going into a support or a resistance area, and you're thinking, yeah, it's going to break out. And then, of course, it doesn't. Or it breaks out by a tick or two, and then fails. Well, I have a feeling we're not going to get any follow through. One way or the other. Still, the only setup we seem to have right now is in the eagle with this possible rule of three. Rule of three simply means we produce three signals against the dominant band. So the band is bullish. We're producing 1, 2, looking for that third signal to print. However, I'm already set up for the signal because we have had the retest of the high, and now we're looking for the failure. The rule of three must always be preceded by a retest of the high or the low. One good thing with the market winding up like this, once the traders get what they're looking for, there should be a fairly substantial reaction, either higher or lower. And I have a feeling with all this sideways trading, nobody's expecting good news. I just have that feeling that everybody's expecting the market to maybe unwind, head lower. It's just a gut check. Doesn't necessarily mean it's going to happen that way. I learned long ago not to try to bring my own personal bias into what the market is doing that day. That's a surefire way to lose money. If you think prices just have to go higher today, of course, they don't have to do anything. All right, here's that rule of 3 signal about to print. We've got the warning dot. Come on. Give me that rule of 3 so I can show people something. We'll set the swing high stop strategy. There it is. Okay, so now technically we have a rule of 3. We have 3 signals against the hard edge. We have had a test of the retest of the highs. I could enter a little bit earlier, or I could leave my stop right here. I would probably recommend you leave your stop at 44.22, your entry stop. But since nothing's going on here, if they pull back a little bit, I'll try to get an earlier entry. Nope, they're not gonna allow me to do that. This low here at 44.21, that's the big obstacle. Once we get inside 44.21, I think we've got a little bit of room to negotiate. Let's see where the support and resistance lines are on the support and resistance suite. This is a system add-on, these lines that you see here on the chart. This will work on any chart style, not just the DTS system. It will work on time-based charts or tick charts or volume charts or really any kind of chart you want, except point and figure charts. I don't think it works well on point and figure charts. But here you go. You've got an assortment of support and resistance lines for today's trading. And no, they are not pivot points. And no, they are not Fibonacci levels. They are much better. You can see the last couple of days just how tight trading has been. This gold line is the median line. And then we have primary resistance above and primary support below. It kind of tends to set the tone of the day if the market gets outside of those. But not so today. Look, today's range is even tighter. We're jammed between the median line and the primary resistance. So nothing going on here right now. So, all right, so we just got filled. I heard the order fill. So first stop, 44.1920, that's where we pointed out that's a big stumbling block. After that, 44.09 3/4, we'll say 44.10. And after that, 4400 and a quarter, we'll just say 4400. So 44.10, 4400 are probable targets if we can get some downside momentum here. We'll see whether the Raptor comes out with a cloud crossover now and whether we get a macro, our first micro macro cross here in the hawk. Ooh, the action. All right, we're going to turn to crude here in a moment because we've got crude inventory coming out at the bottom of the hour. And a lot of times what we'll do on crude inventory report days is it gives me a chance to show you the OCO function. One cancels other. Essentially allows you to bracket a range and then trade that range accordingly. Crude oil looking in a rather substantial range, topping out here the overnight highs. here, yesterday's lows. We're trading right in the middle of that. If you wanted, you could set a buy order above there and a sell order below here. But that's a really big range. That's a huge range. We'll see if things don't tighten up a little bit going into the report in about 5 minutes time, 5-6 minutes time. I may choose to bring the stop in above the primary resistance. When you're using your OCO orders, it's important to remember that they are live the moment you put them on your chart. Might go with the chandelier stop strategy. It's a little bit more conservative. Don't want to get whipsawed out of a premature market. All right, so that's set up. Let's see how we're doing. Oh, we're actually getting a little traction here on our NASDAQ trade. Produced a first micro-macro cross signal while we were looking the other way. So right there, first micro-macro cross, and we're just flirting with our profit target. We did get the soft edge sell here on the Raptor. Actually, we had several opportunities, all printing at more or less the same price level, 44.25. This was the first one down here, first soft edge sell, and it took this long for the trade to actually get to the point where it was prepared to tail off somewhat. Yes, Dan is asking, what's the reason for the different tick sizes? Is it because of the different indicators? Yes. The Hawk scalper, the default value is a 6-tick brick. For the Falcon and the Raptor, we're running 8-tick bricks. And on the Eagle, we're running a 12-tick brick. The Raptor is a little bit more adjustable. And these settings will work for 99% of the markets you're interested in trading. Unfortunately, the E-mini, one of the world's most popular markets, is probably going to be the odd man out. If you put your E-mini on here with a 6-tick brick, your day sessions are going to look something like this, where you're just not, this is supposed to be a scalping tool, remember? And you're not getting enough signals during the day. In which case you need to dial down the brick size. So we have an alternate brick size recommended for, sorry, I'm trying to do two things at once here. My wife will tell you I can't multitask. There we go. We have an alternate brick size for markets of that nature, and that is a 4-tick Hawk, 4-tick Falcon, and a 6-tick Eagle, so 446. And the easy way to remember that is the telephone prefix for Moose Jaw, Saskatchewan. So see, now you'll never forget it. So 6, 8, 12, that's your stock settings, which literally work for 99% of the markets you're going to trade. And then if you happen to get that odd one, you can go to the 446 setting. All right, that trade's coming along fairly nicely. Oh, the trade manager actually rolled my stop. So rolled my stop from up here down to here. So you see trade manager is going to pick up my stop and continue to roll it. When I hit break even, if I hit break even, it will roll the trade to break even. And then if there's another swing point in here that matches my parameters, then it will roll the stop above there. In the meantime, let's get back here to crude oil, which will be releasing their inventory report any moment now. And I'm not real happy about bringing my stop in any tighter. Maybe what I'll do is I'll use this secondary resistance line to hide my stop. So I'm placing a stop above here, my entry below here. Trade Manager, I've enabled the chandelier stops, which you can see are a little bit more conservative. They don't whip back and forth so much, which is what I think I want when the market is just starting to open. Oh, I haven't told you about the Geiger counter yet. Let's throw the Geiger counter on here so you can see the order flow. Geiger counter is a great little tool. What it does is it shows you the order flow. And so you have this tape portion. You're going to see this fill up here in a second with the orders. And then we have the dial segment, which shows us who's currently controlling the market. And you can tell who is controlling the market. Most of the time this kind of whips back and forth. But when it pulls over to one side and just holds and holds and holds for like 4 or 5 seconds, then that shows you a lot of serious buying or selling as traders try to chew through that next layer of orders. The needle here will turn, currently it's neutral because it's white, but it will turn green or red depending on whether the market has become more bullish or bearish. And then you have the current bid and ask displayed as well. Oh, see, there's the report. So we got filled on the long side. I'm going to delete the break-even trigger. Normally when the trade is this tight, what we'll do is we'll let the report release and then we'll cover the trade above and below. So now that we have the bracket, the limit of the market, you could look to sell below here, you could look to buy above here. So that's the alternate strategy. You're also going to notice, or maybe you have noticed, that the width of these bars alter. That is another add-on from Indicator Warehouse. This will work on any chart style. These are the dynamic equivolume bars. So normally when you use equivolume charting, it's only available for candlesticks. But the dynamic equivolume bars can be used on Renko bars, range bars, tick bars, the mean Renko bars from Indicator Warehouse. All right, so let's see if we get some more buying coming through here. So there was a huge amount of buying and selling going on there. That's what tripped the report. And if they allow me to see the market move in our advantage a little bit, I'm going to switch to a more aggressive stop strategy, maybe something like the ATR or perhaps even parabolics. And you can preview your strategies as well. See, so if I had parabolics, see where these orange hash marks are? That's where the parabolic strategy would be at. Clay says there were good reserves, down 9.9. Problem with reports is they're only relative to what the market is expecting. If the market is expecting good news, but the news is not as good as the market's expecting, then prices will go the other way. Likewise, if the market is expecting bad news and the news is not as bad as traders were expecting, then the market will actually rally. That's why they say things like markets will rally on bullish news and fall on bearish news. One thing with the OCO function, you can add more than one OCO order. So let's say we want to add another OCO order here. And again, these are live the moment they go on your chart, and we can add another OCO order here. Well, it was a pretty substantial move on crude oil's part, but now they seem to have settled in once again. Yeah, I know, Clay. Clay says there was no estimate listed. No, most times there won't be, but even the market's perception. That's why report trading is so difficult unless you happen to be, on the inside where you have a pretty good idea of what reserves are and what demand will be. I'm one of these traders who believes that everything is on the charts. These are real people or real computing programs putting real people's money where their mouth is, so to speak. All right, now notice how Trade Manager absorbed the second order, and now it also changed the quantity. I'm going to delete this break even, by the way. So our trailing stop is now up to 2 contracts. So everything the program adjusts for as you add or remove contracts. And like I say, hopefully we'll catch a little bit of a move here, and then I'll switch into parabolics and you can see how that works. Parabolics and the bar high-low are 2 of our more aggressive stop strategies. It might be a little bit early, but let me show you. All right, I'll go to parabolics now. See, all I had to do is click accept, and it moved me into parabolic mode. That may prove to be a touch early because we're just breaking out and retesting now. Market might need a little bit more wiggle room. All right, here, we'll try to ride this one out. Come on, buyers, where'd you go? And you don't have to do this just on the Falcon. You can do this on any of the tools. You can do it on the Eagle, the Raptor, the Hawk. Oh, are they not going to allow me to ride that out? Come on, you stinkers. All right, well, we'll put that away for now. We'll come back to that, see how that matures. All right, and we're now in a macro pullback here on the Hawk, and working into a cloud crossover on the Eagle as well, or Eagle, sorry, on the Raptor as well. So what that means is with the Raptor, we've changed direction. Our clouds have officially crossed over. The market has drifted into the cloud. We would expect the cloud to offer resistance now, and that the market will try to head lower from here. If it does that, it will produce a signal telling us that it's time to short the market. If it doesn't produce a signal, well, then we don't short. We had a macro pullback signal here, which has since moved into yellow bars, so I'm going to avoid that. Okay, here comes the NQ on our Eagle trade. If I can get a couple bars here in my favor, this is going to be time. It's going to be a signal for me to start rolling my stops in a little bit more aggressively. What's happened is the sellers have breached the lows. They've come back. They're retesting now, and we're looking for additional selling. If we get that additional selling, well, then I may as well, as a seller, start to bring in my stops, because if the buyers overwhelm the sellers at this point right here, then they're very likely to threaten my stops back here, and maybe even take it back to the morning high or the overnight high. Yeah, good question from Clay here. Clay asked, would you normally just stay out of trades when the market is sideways like this? Yes. Yes, normally I would. I might have tried this rule of three signal, just as a throw a onesie in it, see what happens. None of these other trades that we've been looking at this morning were really quality trades. In the trading room, we really try to hold out for the quality trades, but this is the open house room, and I know you guys want to see how these things work, so I end up taking some trades which are not always as desirable. The trading room is also, the members trading room is also a training room. You know, we don't just hang around and point out trades all day. We do explain things like, you know, why we're not looking at this sell signal. Well, because it's off of yellow bars. Now this next one is going to make for a 4-arrow consolidation. We have 1, 2, 3. If this yellow bar signal prints, that will be signal number 4. Now, a 4-arrow consolidation tends to be a pretty reliable signal. So we could set it up to short it here. There's enough structure here. I could probably cover the trade at least above the high. Maybe even dial down the risk amount, just go in there with a onesie. Because, hey, the market doesn't have much direction today. Or I may choose to shoot a trend line across there and enter below the trend line. You know, give up a couple of ticks. The hash mark, after all, is only a suggested entry. And enter below the hash mark or below the trend line if in fact prices continue lower. See, now we're getting that green bar sell signal, which is going to produce right here. But now my entry is too far away, so I need to adjust things once more. But yeah, in markets that are this quiet, we don't usually trade. Or the trades that we do point out, I try to reinforce to people that I'm showing you this, but it's not necessarily a trade you may want to put money on. Let's see if we can't demonstrate a 4-arrow consolidation. It would be nice. It would be nice if it broke down here. We could get some, we could get a decent move perhaps back to the lows, perhaps even lower. Sometimes what I'll do with when I'm trading singles as well is I'll try to run them out just on the off chance that maybe they'll go a little bit further. Come on. Come on down. Yeah, we're into the hard edge now on the Raptor. I'm sure there's a few of you who would like to see a Raptor trade. So we're into the hard edge on the Raptor. We would anticipate the market to come out of here with a signal now. If they don't behave soon, we're gonna have to, might have to close up the room a few minutes early. on, sellers, where'd you go? An important thing to remember when you suspect the market is sideways, oops, wrong tool, is that buyers are likely to buy toward the bottom end of the range. That could be anywhere here from the bottom half to bottom third. Sellers are likely to sell the top half of the range, top half, top third. So what that means is, as a seller, you don't necessarily want to be selling the bottom end of the range, and as a buyer, you don't want to be buying the top end of the range, because you're just going to be buying into all that selling or selling into all that buying. So until the market actually chooses a direction, it's a little bit of a crapshoot, which is what we have right now. So I think it's going to be more of the same, folks. It's going to be a little bit painful here watching the market struggle for some sort of direction. This green bar sell signal that I've been hunting here on the hawk is now just going to move into green bars, so we can cancel that. Can still nurse our eagle trade. The sellers should step up here one more time. I would be anticipating the sellers to come into the market. Just for kicks, let's throw a trend line on there. So maybe around 44.28-ish, at which time it would be advisable to start rolling your stops. Take a little bit of risk out, start to roll your stops down. And if the market does not fall off today, then break even would be a pretty good compromise. All right, if anybody has any questions, please type away. Otherwise, I think we're going to close up the room a little bit early here, just so I can go get stretched out. I do apologize. I'll be better in a few days. I know I will. But right now it's just being a little difficult. No questions. All right, you guys. Thanks very much for your attendance. And I will see you guys next week. And watch your emails, because I do believe there is a Father's Day special. If there's any of these indicators that you're interested in, you can look for more information about that in the next few days. All right, DTS owners, I'll see you in the room tomorrow morning. Bye for now.